Hello and welcome. Today we're working on the investing activities section of the cash flow statement. If you're new, my name's Jeff from Finally Learn. We're working our way through the principles of accounting, and so we're in chapter 12, the statement of cash flows. And remember, there's three sections of the statement of cash flow. There's operating, investing, and financing. Now, we're in the middle of a playlist. I've already worked on operating. We're working on investing in this video, and the next video you'll see is the financing activities. So let's work on a problem here. And we got lots of information, and what we need to do is work on the cash flows from investing activities. Now, one thing we're going to do, we're going to play a little game called operating, investing, financing. So let's just look at every idea here, every chart of the accounts here and the amounts. Let's figure out what is operating, investing, financing. Operating is anything involved in net income, current assets, or current liabilities. Investing is long-term assets, and financing is any long-term debt or equity. So what is net income? Well, that's the definition of operating, right? Depreciation expense, it goes on the income statement, so that's operating. A gain, I'm skipping one here, a gain is going to be operating. So what if we sold land for $27,000? We have an original cost of $20,000 and we sold it for $27,000, so that looks like it's a gain of $7,000. The gain goes on the operating activity section, and the land, the sale of land, is investing activity. Okay, so there's one of them. Cash payment on notes payable, that is long-term debt, so that is financing. Inventory is current asset, so that's operating. Cash dividend is equity, so that's financing. Purchase stock in a company, that's an investment, so that's investing activity. That's a long-term asset. We issued bonds payable, so we're trying to borrow money. That's long-term, that is financing. We purchased equipment, that's a long-term asset, so that is investing. And accounts payable is an operating activities. So we have, for investing activities, I think we have only three. Let's check here. I think we only have three items. So let's highlight these. Investing here, and we purchase equipment, that's investing. So we only have three investing activities. So it doesn't matter the order, we just start at the very beginning. So we're going to say something like sale of land, and the amount is $27,000. So here's the question. I've already have the cash flow from investing activities, and I'm going to have a total here at the bottom. Just add these up. So sale of land, $27,000. Does our cash go up or our cash go down? Well, you're selling land and the cash goes up $27,000. So we're going to make that a positive $27,000. So far, our cash flow from investing activities is going to be $27,000. We've got two more. We purchase stock in a company. So we purchase stock in a company. Is cash going to go up or down? Well, we're paying cash, so it's subtract $12,000, so it's negative $12,000. And we purchased equipment. We purchased equipment for $17,400. Is that plus or minus? Well, we purchase equipment, you know cash goes down, so be careful, cash goes down. So here's what happens. We sold land, cash goes up. We purchased stock, we purchased equipment, cash goes down in both of those cases. So the cash flow from investing activities is going to be a negative $2,400. We're going to use the same information, but we're going to do financing activities, and so that'll be our next video. See you then.